Good day, everyone. All right, let me get these links shared, and then we'll get the live stream started. Looking forward to doing some charting. Gonna start from scratch on this one. So we can go over and get an ideas of the kind of things I look for. Live stream starting. And I'll share in the Discord, the Telegram. I have a lot of places to update, especially when I'm charting too and trading in the members group. I have a members Telegram. We have different members Discord channels, and sometimes I'm also updating on Twitter and the public Telegram. So I'll just throw this in the public Telegram announcements or public Discord announcements. Live stream starting. Hey everyone. Welcome. I see a lot of people pouring into the chat. Not reading yet because I gotta share this on Twitter. Someone's saying my voice is too low. I don't know if you mean the resonance of my voice or the volume. Is it just too deep or too low? Yeah, I always get different feedback on the volume. Try turning up your YouTube volume. Sometimes that could be the problem. Some people say it's too low, other people say it's perfect. And I will say it's as high as it can go. So what we're going to do here is we're going to pull our high time frame support first. We're well aware that we kind of bounced off the last relevant fib in this range, which is the 886. And the reason, somebody asked me why, you know, as price was working its way up here, why I chose the 886, whereas sometimes, like for example, I was much more keen to long this 618 golden pocket on this retracement, and why I was so fixated on the 886. And that's just because of the harmonic and Elliott wave ideas that I had built around this level. So it wasn't just I pulled the fib and said, oh, the 886. There was a lot of context. There was a context because of how where this was rejecting from the 123.7. So anyways, that's why the 886 here. And the reason I also liked it is because we could come in and sweep this low and do a little bit of a liquidity grab. So we know where we're bouncing from. We're bouncing from a swing failure of this low. This is our major local support. We have obviously our major low below it. And now let's look at our high time frame fibs to the upside. So that's pulled left to right. Oh, I'll need to turn off my volume there. That's pulled left to right, top to bottom for your resistance. So from the high down to the low. And you can see this represents, I'll put on the percentages here, a 61% retracement of this distance. So that's what these fibs represent. So this is our major, you'd call it your major golden pocket in the range, the major high to the major low. So we should always be aware, even when scalping, of all of our high time frame levels. And that would include the 382 and the 618. You can put on the 236. But it's not something I would trade without a lot of confluence. But we can put it on here for fun. I changed the color to white. So now this is something else you can do as you start to look for ideas. And you can clean up your chart later. Is you can also pull fibs from the other major pivots. And this is something I talk about a lot. Is what you'll have is you'll have a level that becomes a significant high that becomes the 618 after the lows put in. It's kind of like a reverse fib extension. So because of how Fibonacci retracements work, and it's all fractal, you'll often find that at the time this was obviously not 618 because this low didn't exist, but now you have a swing failure opportunity there. So I'm going to clean off some of these fibs quickly just to clean up the chart. So we're going to have our fibs pulled from this high, our fibs pulled from the ultimate high, and our fibs pulled from this high. And these are all going to be relevant. And why are we pulling from each one? Well, what you're going to see here is now you're going to see that the 236 from this pull aligns with the 382 from this pull the 236 from this high aligns with the 382 from this high. And you have to understand that all of these fib numbers are derivatives. They're all Fibonacci sequence numbers. So what's cool is you'll find that the 23.6 extension from here is exactly, or sorry, retracement is exactly the 382 from here. The 382 from the higher one is exactly the 618 from this one. So are you starting to see how this market is fractal? If you start measuring these moves, now the 382 and the 618 are inverses of each other. The percentage difference between 1 and 618 and 0 and 382 are the same. So they're inverses, if that makes sense. So if we put on a 0, the distance between here, let's even pull off the 6.5. The distance between here and here are the same. So that's why the 382 is very important, the 618 is very important. So we're looking for something called confluence, and that's where a lot of ideas line up together. So we have fib levels now, and we can see we're interacting with this 382, and we're interacting with the 236. Now, I'm going to pull some volume profiles. Volume profiles show you where the volume is being transacted. And so if we pull it across this entire range, you could do it two ways. We're going to mark out the two same levels no matter what. You could pull it from back here, or you could pull it from the low, which will give you a slightly different level. But we're going to mark out this level. It's our point of control. So this is where over the last, since June 18th, since we put in this low at 17K, this is where the most volume has been transacted at this price. It's important resistance when you're below it, important support when you're above it. So we're going to call it the range POC. And above that, we should mark out this high volume area that's also very close to being a point of control. This is going to be very relevant too. POC 0.2. So what are we seeing here now for confluence? Well, we're seeing we have a level at around 19,780 to 19,850. That is the range POC. It is the golden pocket, or 618 from this retracement, and it's the 382 from this retracement. So now what have we done when we're just charting horizontal levels? Well, now we've created a level on our chart where we see a lot of confluence. We have 3 levels now for this being significant resistance. And not only is it a significant resistance in terms of retracement, because of this point of control, we know it's a high liquidity area. So we want, because there's a lot of people who have positions from this price point. So whether it's returning back to entry for people for their longs, a lot of people like to close out their longs. It's going to be resistance when they get back to entry. So let's be aware of that level. Now there is a level more local that I'm aware of, which is the golden pocket from this pivot high that aligns with these range lows. Now I'm going to tell you why, so that you'll see it's perfect. It's the 618 from this pivot. This is probably the lowest time frame relevant level, and so you have the 618 with the idea of a back test of this old support as resistance. So this is just a structural horizontal level. And I'm walking through this so you guys can have an idea of the types of things that you'd look for on your own charts. You know, this isn't the quickest way for me to chart because I kind of know what I'm looking for, but I'm trying to walk through the logic here. So could this level be good for a scalp? It could be. This is probably the absolute lowest time frame level I personally would be interested in scalping a short, but I'd be very wary because as we start breaking out here, you don't want to short a breakout accidentally, But if you do see lots of volume coming in, lots of longs opening, open interest increasing as CVD, cumulative volume increases, that tells you tons of longs are opening here. That can be very bullish until price starts rejecting. And if it comes back below this high, that is a technical setup called a swing failure, where you've grabbed the liquidity on this breakout, you've trapped a bunch of people longing, and then you can have your retracement. It doesn't even have to be a major one. I mean, it could just be down back into these lows. And so you could get a scalp short potentially, and I would just put my stop above whatever new high came in here into a retracement to add to my swing longs. That would be my plan. So that's the absolute lowest level I'd be willing to consider shorting. And that comes in around 19,520, 19,570 on the Bybit BTC USD perpetual chart. So I'm going to keep that, I'm going to be aware of that level. And so what I would do now is I'd set an alert. Add alert. I like to go every time. Sometimes I take naps and I need a couple alerts to wake me up just in case. But anyway, so I want to be aware of that level. I want to be aware of this level. Now, another thing you can do is you can name the alert. So you can just name it POC. So if it pops up on your phone, you know what it is. You could name an alert Major Golden Pocket. It just helps you be aware of what alert's going off quicker, especially when you're trading a lot of alts and you have a lot of alerts set as well. So these are our horizontal levels. We could start looking for trendline ideas as well and channel ideas. So this would be our most local descending trend line. I'm going to actually turn off the extensions here because it's going to make the chart. If I zoom out, this looks really dumb. But I'm only focusing on this price action. I just have extensions on this channel. So I can turn this, bring this down. I'm not going to delete these fibs yet. Like what I would typically do is after I've found all the levels of interest that I have, and if I don't have a lot of confluence around certain things, I'll just go into the settings and turn it off later. But first I want to see everything. I want to be aware of everything that is relevant, and making sure if I see overlapping ideas that I have that visual. Yeah, someone's pointing out Adam's swing failuring. I'm aware of that. I have an alert on my phone. We can look at it briefly. I'm going to turn off this dot position. Go to Adam. I have a few different charts. So Adam's been in this this higher time frame ascending channel, and there's a lower time frame ascending channel here as well. It initially did reject from the 786 on this retracement, but it's not swing failuring now. Like a swing failure, I'd say it needs to come down back below this level. It's right now looking more like a breakout. But again, you want to be aware of all of these fibs from these pivots. I will kind of stay on Bitcoin here. I mean, this level looks quite nice. I'm sure there's an opportunity for a possible point of control. Not there in this range. But I would be locally keeping an eye on this ascending channel. It's going to be relevant. Could probably be fixed a little bit here and now with this new price action. Yeah, it was a perfect touch here. So if you had the angle from the highs, this was an old channel of mine, by the way. If you had the angle from the highs and then you anchored it to the lows, you got a perfect touch here of the descending channel, which if you know my style, that's a setup I really like for trades. So you can be aware of this. While we're here, I'll just show you how to set an alert on how I like to set them on like channels. Is I like to draw a ray that front runs it. So I have a little bit of a warning when we are approaching the top of the channel. And then you can right click it and you go add alert to ray, and you can call it ascending channel top. Could go once per bar, once per minute. But yeah. So anyways, that's how I would set alerts. Let's go back to Bitcoin here. I would be cautious personally shorting anything right now, because we need to see how Bitcoin reacts to you know, I have a lot of alts. I have a long on this swing failure on one as well. So I longed Harmony or one here. I've longed FTM down here. I've longed Sol. I've longed Sol many times. If you've been in the member group, I've been longing Sol since down here, taking profits, longing, taking profits, longing, taking profits, longing, and I longed again down here. And so there's a level up here of interest on Sol. But Bitcoin sort of, you should always be aware of what Bitcoin is doing and where it's at, because typically the market likes to move with Bitcoin. If Bitcoin's breaking out, going up, claiming support, resistance into support, alts are more likely to carry up. So it's a great confluence to use with any of your trades. There's not really going to be many ascending channel ideas here, although there is one that I would have on my chart personally, which is this one. And you'll see, you know, if we do this, it's going to align, if we get a big impulse, with this range POC and this golden pocket. So personally, I probably will not even bother trying to scalp this level. I'm aware of it. I'm actually going to turn off this fib because it's not needed. I'm aware that that's a golden pocket and it aligns right with these range lows. But I'd be more interested in looking for a scalp short off of this level personally. And probably the most sensible thing to do would be a stop above this high. There's not really, unless you get, you know, but I will not short it blindly. I will wait to see if there's a reaction and see what order flow and price is actually doing here. Because if we get here and it looks really bullish and there's really nothing bearish happening, then I'm not going to short it. But anyway, so we also should be aware of our major trend lines from the highs. There's not going to be any here that are relevant. And there is potentially one right here. You can anchor it right to the wick. I always pull my channels and my trend lines from the wicks. I do not pull them from the closes or the various ways that people like to pull them. Yeah, so I think there's a lot of nice confluence here for a potential scalp short, and then I'd personally be looking for a retracement back into, well, we always want to be aware of two levels here horizontally. Let's just, so we can zoom in and still be aware of what everything is. You can color code it too, but let's call this wick 1. And wick 2. So these are both going to be important levels to backtest as support. So we should be aware of them. So if we do push up to here, let's say, and reject. So this would be another example of, all right, I know this is getting confusing for people, but I'm going through the thought process. I mean, for a lot of people, all they're going to end up seeing is me saying, I'm scalp short from here. And they'll say, oh, you know, whatever. Anytime I take a trade, there's always people saying, I would not be trading this. It's very bullish. It's, you know, the Fed just said, I don't haphazardly take trades. I plan everything out quite, you know, I don't always even leave all my levels on the chart. I've kind of gone back and forth on that. that it's just too confusing for people to see everything. But anyway, so what this would do is if we pushed up into this level, so now I'm projecting. I'm going to take off this, I'm going to re-pull this fib so we can just look at it locally. I'm projecting an imaginary high up here. So let's just pretend we do get this level up here. And delete this trend line, I don't really care about it. This will potentially make this pivot low right above a golden pocket retracement. So this could set up a nice move back into the golden pocket, sweeping this low. And why is it important to sweep that low? Well, the reason is because anyone who's been building longs here, or even people who have longs from down here, are now going to be, as we start breaking up, many people will be sliding their stop losses up under this low as their invalidation. And so price breaks up, people move their stop losses up, saying, well, I'm so happy I'm in a long. And then maybe they even start adding to their longs on this breakout. Price comes back down, stops everybody out. You'll see all this volume come in, and then some of these people will either not be able to get back into their longs because they're not available, or they'll just get bearish and start shorting because that was their invalidation for their long, so they obviously assume that's bearish. Where this is where I'd be looking to take my long, and then, you know, if you start getting that reversal, that strength, then all these people that have been longing here have to pour back into longs all at the same time, and that squeezes out all the breakdown shorters, and you can get a bigger move to break up through this resistance. So that's kind of the logic of how this could all play out when you're thinking about the real people in the market that this price action would affect. Somebody's asking me where they can find my TA signals. So I want to just be clear. I have a group. I do not give signals. What I do is I go through all my charting ideas and I share them, and then I say when I take a trade. So like, let's just say, like, this is how it would essentially be. If you're in the members group, maybe I've talked about this level, I've shared the chart, shared my plan, maybe I've shared a 1 minute, 2 minute video going over what I'm looking for. And when the level is approaching, I might do an update saying I'm preparing to take a short if I like what I see. And then if I take the short, I just say I took a short, like a scalp short, a swing short, whatever it is. And so I just update that I took the trade, or if I didn't take the trade. And that's it. So it's not like everybody buy here, sell here. They're not signals. I don't recommend anybody take the trades I'm taking. I'm simply sharing what I'm doing. And why am I doing that? Well, this is all the stuff I teach. And so I want to give people live examples of me trading the stuff. And, you know, if you see it enough times, it starts to click, right? You start to look for these things on your charts because you're seeing every day these types of things being pointed out on the charts. So that's at luckyapestradingfloor.com, which is, there's a link in the description of the video if you're interested in that. Let me read some chats here. Somebody's saying that you guys should be liking the live. Why is nobody liking it? Yeah, you guys, come on. Jeez. This stream will, someone's asking if I can keep this stream on the channel for a few hours. I'm outside right now, unable to watch the stream. Yeah, it will be available. I think all the live streams are afterwards as a recording. So. And so, you know, what will happen here if we do reject from that first level I mentioned and I don't take a short? I won't really care. It's just, for me, it's, I don't need to trade everything. What I want to trade is ideas I really like. Things that I really think are high probability. If something just doesn't quite seem right to me, I'm not so interested in trading it. And I'm fine to miss a trade because there'll be countless trades every single day. And so locally here, if I really wanted to say what I'm looking for, well, yes, I have my longs already, and I want to add to them. I've taken profits on all my alts, and I've moved my stops up to entry. And that's just because I want to not turn a winning trade into a losing trade. I can always re-enter if we come back and retest the lows. But now that I've taken profits, I'm looking for opportunities to add. And that could be this idea here. And I may scalp short. I'm not as interested in scalp shorting, by the way. It's just something I may do if I like the setup. But yeah, the thing I'm most interested in is adding to my swing longs. But I might be looking for something like this, back into this level. Now, let me just point this out. This level isn't a real level yet. I'm projecting this level. So I'm imagining where this level would be if price comes up to here. And this is something I'll do a lot with my Elliott wave ideas. And a lot of people are like, that's like, even people who know a little bit about Elliott waves, they'll like see my chart and be like, you know, that doesn't make any sense. Those levels don't exist. And it's because I'm, and it's also why I think I have accurate high time frame Elliott waves, is the levels don't exist yet. You have to imagine if, and pull everything, imagining what would happen if you pushed up to here, came back to here, and you need to pull those levels hypothetically and adjust them as they actually come in. So like, I will re-pull this if we push up here and we reject from here, wherever it is. I will re-pull this level when we get the rejection, because this level does not actually exist yet. But yeah, we need to watch, because we could just break out straight through this level, in which case I'll just carry my longs. You know, there are instances, they're few and far between, but you know, many might remember this if you've traded for a couple years on Bitcoin, where we broke out of this with essentially no retracements, you know, straight up billions and billions of dollars squeezed, super volatile move. So that's always a possibility. You know, our first retracement here, 382. So it's worth noting, if we come down to a lower time frame here, as we look at this absolute mess of a chart, not very aesthetic. Essentially, we've bounced from the 382, and I'll delete this for now because, as I said, it's not even a real level. But essentially, we've bounced from the 382, and when you're looking at retracements, a 382 is a very bullish retracement. And so if we hold this 382, this would be considered a bullish retracement, and a very strong trend could start locally from here. And that's exactly what happened with that short squeeze. But I don't want to get people to FOMO too much, because it's not uncommon to see an initial bounce off the 382 and come back and sweep it later. But just always be aware that you should be cautious for potential bullish continuation when you're starting to see that 382 hold up, because that isn't one of the earliest signs that you might be in for a stronger continuation. And that let me just show you a quick example of that, just with the fibs. I have to go all the way back here. So, you know, we'll just pull levels really quickly here. So we have this initial impulse. We had a 382 retracement, and obviously a strong impulse. And basically, we weren't getting like any type of retracements deeper than a 382 from here. Then we have another impulse up into this high. We slightly front ran the 382. So again, we push up 382, 382, and we're just then we make a new high, and again we push up 382, and we just keep impulsing higher and higher. And we basically pushed all the way up from 28,000 to 52,000 with no major retracements beyond a 382. And this is just an example of when a 382 can signal a bullish trend. But do not get that wrong. There are times where you have an initial 382, a bit of a bounce, and then you come down for a deeper retracement. So it's just something to be aware of. What kind of retracements are coming out of a move, and you might be in for a stronger trend if it's just 382s. There was a question I wanted to answer because I got a lot of shit emojis for it. This was a while back. I made a video on the way that I use channels, and it's different, I think, than anybody else uses them. It's really a high alpha video. People really enjoyed it. I initially posted it publicly. You know, I don't know. It got a few thousand views, 4,000 views. I'm not sure, but you know, I said I'm going to leave it public for a little while, and then I'm putting it private into the members group. And then people were upset about that. But somebody asked me today, you know, why do traders not want to share their edges? And what you need to understand is that edges are very hard to develop and find in the market. And it's not because a trader is necessarily greedy, although that could be the reason. It's because the more people who start trading a live stream, I've read a comment. The more people who start trading a concept or idea, the less likely it is to work. And so, you know, if you have edges that nobody else has seen in the market, then you could potentially trade that for a lifetime, and it's essentially printing money. But if you start sharing it, and then they share it, and more people start trading those types of setups or ideas, which you could probably apply this to classical patterns, the less likely they are to actually produce an edge over the market or any alpha. And so that's why people protect their edges. They don't like sharing them because, you know, they're not easy to find and develop. And theoretically, if enough people start trading them, then they'll stop working because the market's in search of liquidity. So the reason classical patterns, you have breakouts and fake outs, it's because of liquidity. So many people are watching that breakout and they're snapping their long off on the breakout, and the market wants to crush those people because that's how it makes money. So it wants to take all of that money that they just poured into those long positions, and to do that, market makers are going to reverse the move and stop out or liquidate all those longs. And so many people trade those classical patterns and classical breakouts and breakdowns that they essentially, I wouldn't even say they just don't work. They're like negative alpha at this point, especially in crypto. So, you know, eventually price does break out, but like 9 times out of 10, it fakes out. And so anyways, in theory, some of that could happen with some of the stuff I'm doing, but I'm not too worried about it because my trading style counter trades 99% of the market. So you'd need you'd need a very high percentage of the market to start trading this way for it to actually have that much of an effect. We'll see. I mean, there's some of the concepts that maybe not so much, but yeah, that's why people don't like sharing their edges. And I'm just looking at something on another screen really quick. Yeah. So one thing I'll say is the other thing that makes my trading style hard to duplicate for people, where they, you know, it's not as simple as just saying, oh, you would look for a long when this happens. It's an emotionally taxing way to trade. Because the average person emotionally wants to short here. You know, people, when I posted publicly that I'm just going to create a group and just turn all this off. When I posted publicly that I was swing long right here. I mean, this was my setup. Into the 886, we hit it to the penny, to the dollar almost. I said, I'm swing long. People saying, you're going to get wrecked. You know, do you not understand what it's, you know, and this happens all the time. And people want to short this. And you'll see tons of shorts opening into moves like this. And so no matter what, even if people have prepared to long this, when the time comes, it looks so darn bearish to them, there's just no way they'll ever want to long it. But it's actually, the reason it's such a great long is as soon as you've tapped that level and you've come back above, your risk is as low as possible. Essentially, your invalidation is as close as possible. Yes, you could break down, but you can get along as close to the liquidity as possible. So anyways, no matter what, people are always going to be drawn into longing. Like I shorted this. I shorted this wick. I want to actually point something out. You know, people say like, you're going to get wrecked. I use risk management. I longed here. I longed here. I shorted this. I shorted this. And I longed this. And I longed this. Literally the bottom. The 5-minute candle at the bottom of this move. The 1-minute candle at the bottom of this move I longed. I longed the absolute bottom of this, 17,600. I longed the absolute bottom of this. I shorted the absolute top of this. And I'm not shorting this. Not to say I didn't take losing trades, but I would say this represents the majority of my attempts at swing longs and swing shorts were at the absolute highs. And so, you know, anyone can attest who's been in the members group for a while, for example. I was waiting for this short for a very long time. I said, I'm not shorting this. I even said, I'm not shorting this. I think I did a post saying something like, you know, after all this, don't front run my level. And so we end up getting that final push up. But anyways, and there was TA, right? I'm not just shorting all or longing, you know, these levels without any reason. I have reasons why I'm taking longs here, and I have systems to trade it. But what I'm pointing out is when I'm longing this, nobody else is. And how do I know? I can go to the 1-minute chart, look at the volume, look at how fast this reversal happened. I'm in a fraction of 0.01% of people who traded this move at the bottom. And statistically, I'm probably one of almost no people who have long this, shorted this, long this. To have one person that has done all of those, long that, is almost statistically impossible. So that's how I know my system is, like if you understand probabilities, the odds of somebody doing that is almost impossible by accident. And I'm not trying to brag on myself. I believe in the technical analysis I use. And not to mention, I shorted this, long this, and shorted this with a plan all from here. I had every one of these levels marked out beforehand. And there's members here that also traded those along with me. And people, I posted a lot of this publicly on Twitter. So, you know, it's not to say I don't lose trades. I certainly do. But I know what I'm doing. I use risk management, and I'm not making this stuff up. You know, people show up in my comments on Twitter and say, how can you long with all these, you know, they just announced the inflation numbers, the QE, employment numbers. It's like that's always the narrative around all this stuff. It's so bullish, it's so bearish, it's so bullish, it's so bearish. And you know, people show up in my comments like, how, you know, you just think that price moves between your magical little waves and levels and whatever. It's like it has nothing to do with anything. It's like, yeah, I can tell you with certainty that it does. And that what you're talking about has nothing to do with anything. Because I've spent my entire life on this chart. So, like, and that's where I would say, I know now I'm just kind of ranting, but not really ranting. That's where I would say that for those who are... actually, no, what I was going to say is sometimes I do tweets like I'm not being egotistical, but I'm one of the best. And what I mean by that is like here, I know statistically, I am one of probably the only people in the world who has traded this range the way this accurately. I know I'm one of the only people in the world who traded this accurately, because because you can see the volume, you know how many traders roughly are trading these levels at the lows and highs, and you know statistically the probability that there's other traders that are trading the exact lows and highs as well. There's just not enough time, right? Like there's not enough time for a million people to take a position here. These levels exist for minutes, and to have those planned out and trade them, you just know you're you know you are one of the best in the world, just mathematically. You know, but people say to stay humble, and I am humble. I mean, I have less confidence in my ideas than probably the average person who follows me. I trade everything with risk management. I trade every trade like it's going to lose. I don't assume any trade will win. So, I put in a lot of work, and I'm very patient. And I do lose trades. I'm not saying I don't. So let's see what happens here. Well, I'm not going to sit on stream, but this is the level I'm interested in most for local resistance. And then a retracement down into support. If I don't get a reaction here, I'm not going to trade it. All right. Yeah, so my plan here was because I feel we're at a significant level. You know, you don't know that this will be a significant level for certain until you get a bounce. Well, we've gotten our initial bounce. That's not surprising to me. I'm not surprising this was a profitable trade. But now we have some resistance to reclaim. So we have to see what happens at these levels, and we have to see what happens at the retracements, because we can easily just run them down. So, you know, you need that's where you'd need to start getting into things like order flow. So all of this is theory, and you don't really know what's going to happen until price reaches the level and you see what happens. You know, are bigger traders and market makers absorbing all the longs? Is there enough volume for this to be the primary liquidity idea? Same with the retracements, all of that. So, yeah, my plan was just to do this. So, you know, these are my levels of interest locally. If we break up and we don't get a rejection here, then I'll just be looking to higher levels, right? Well, what's the next level I'd be looking for? I know this is a messy chart. I apologize because I turned on all my fib levels. But I'd be looking to come up and swing failure this high. So sweep the liquidity above this high into this golden pocket. That's around 20,500. 20,600, 20,700, and then I'd be looking for that move back below this level to short it with a stop above that high, and looking for a retracement there, maybe into a retest of this point of control could be nice as our kind of the most local level. Below that, you'd have to be looking deeper into some of these retests of these levels we swing failure. All right, I appreciate you guys. Hopefully this was helpful. Fun stuff.